Morning, everyone. How are we doing today on this fine Friday? Yeah, W. We had a pretty nice, pretty clean CPI candle. Lots of choppiness afterwards. This is why you don't trade until market open on CPI days. We left the Asian high alone, so that may be an interesting level to return to. Major buy-side liquidity. Aligned with our CPI data highs, these are nice and relatively equal. We have our pre-market low over here. CPI data REH. High time frame charts. 15-minute. We're coming out of this really large distribution lower from yesterday. So yes, technically the morning session isn't going to be, or isn't meant to be, the best today, but I'll look for TGIF. So if you grade this from the highest high to the lowest low, and I know there's a lot of lines in the chart, but those will be removed in a moment. These are our TGIF levels, 20%. When it made another low, it returned back up into 20% with the 3 drives. We have now a breaker block, inversion fair value gap, and a regular fair value gap to hopefully boost it higher. I want to see it avoid the pre-market low, find support from these levels here, and then run up into the data highs, and then beyond that, hopefully TGIF 30% retracement level. We're looking for higher prices today. Yeah, I'm looking for higher prices today. So far. Also, exact same analysis. Let's go, Birdie. TGIF, if you want like a little TGIF hack. Oops. Remove this stuff. If you have a very large one-sided expansion towards the end of the week, you've got the added, well, you've got a high likelihood of TGIF occurring, especially when you're in an area of support. So right now we're in this daily volume imbalance over here. This is actually not the one that I'm using, because I'm using the Salmon one, so let me just put that on correctly. This one. And if you look at the midpoint on that, from a 15-minute bellwether time frame, we've got some really nice bodies just there, nicely aligned. If I see, and say I'm bullish, and I see really nice bodies aligned at a level, followed by displacement, it's beneficial to not see this taken out, because that would be the perfect beginnings to a run that ends up going higher, because they lay the bodies in perfectly as an area of support. It's like the market telling you, I'm going to stop and turn, and I'm going to go in the direction of bias. So to see this left alone is what you want to see. And then because that is our pre-market low, going back to the main charts, that level right there, because that's our pre-market low, we want to see it left open ideally. So where we may normally look for a black bell, if we can get a black bell and it sweeps the pre-market high, unless my bias is wrong, of course, because I could be wrong on my bias. If my bias is correct, it shouldn't reach into the pre-market low. Really, it shouldn't. Let's take a quick look at ES. ES has gone S&T at these lows as well. So S&T inside of a bullish daily chart PD array, plus the 3 drives. plus the likelihood of a TGIF setup. So you've got a lot of things that converge here, and align to give you the likelihood of higher prices, especially with these really nice draws on liquidity over here. 5-minute time frame. Nothing super clean over here. Not really. The 2 minutes kind of nice. Okay, you really want to use your midnight price and your 8:30 price today. So that's midnight. And because we had a CPI candle, you definitely want to use 8:30. How we gravitate around these levels is going to be a very good tell on how we're going to start moving. So in the coming minutes at market open, if we're seeing price move down below 8:30 and then reject and show strength, that's a good sign that we're going higher because it's reacting to this discount level. Below 8:30 is discount. Below 8:30 and midnight is a deep discount. So that's this entire area, I guess, is in a deep discount. So it might be a less favorable morning session because yesterday was such a large range, but we can still look for general good probability setups. Yes, same. Why does it say? Okay, that's weird. I should probably put the new day opening gap on. That's weird on. SMT means smart money technique or smart money tool. It's when liquidity is taken on the NASDAQ, but it isn't taken on ES, or the other way around. So if NASDAQ comes out and takes out this low, it makes a lower low, but ES, it doesn't take out this low. So that's a higher low. And that just means that if it's gonna move, because this isn't the confirmation of a move, but if it's gonna move and reverse, it's gonna essentially perform as a catalyst for that move. It's gonna make the move a lot faster and it's gonna accelerate it. And you want to see immediate reaction from S&Ts. You're welcome. If you're in here, like this stream. Oops, that one. So that's a preset, but I guess not. Morning, Kayla. Just waiting for this 9:30 candle. Okay, so it's going to be a roughly 60 handle opening range gap. That'll probably get filled in pretty quickly then, because we're looking higher. It's created a series of lower lows. So taking out that low. Now it's equal. So there's S&T here as well. At this low. So it should probably move into that gap pretty quickly. Spelled that wrong. Okay, really long wick, rejects the 830 level. Doesn't take out that low though. S&T, but it's an indecisive candle because there's damage both sides. This takes out buy side, this takes out sell side, and the body is indecisive. So even after all of that entire minute of damage on both sides, it closes and the body isn't telling you anything. It's just a very negligible body of a candle. In a condition like that, you want to just let it show you some, larger, significant, fat-bodied candles, and then you can get a read on the story. If this is left at a swing point, that's an S&T with ES. And it is being left at a swing point. The reason I annotate the consequent encroachment is because that's a very good draw right now. Okay, it is an S&T, and it's between midnight and 8:30, so it's not the highest probability. Oh wait, no, it's below them both. It's below 8:30 and midnight opening price. Those are the best S&Ts, the ones that are below in a deep discount. If it's a bullish S&T in a deep discount, that's a good S&T. And even if price is very bearish, but you see an S&T, say between ES and NQ right here, it can still provide a good reaction to the upside, and you can get a little counter trend scalp. You don't really want to do that on the 1 minute chart, but if it's something significant on a daily chart, it leaves you room for classic buy day setups, which is a bit of that's a good bit of knowledge. One of Zach and Kevin Stolly Welrick, they've been calling me recently. Okay, you can look at the sell side of the curve, and you can see this suspension block right here. Can extend that forward. The best situation here would be for it to not close inside this suspension block. If it can close outside of it, to the upside, like above it, not below it, that's the best, because it's not even needing to return to that array, and then it will just run up. That's not what it's doing, so not ideal for higher prices. But if that's what it did, that would give it a nice push, nice boost, you could say. Let's take a look at our opening range gap. Okay, there's an S&T between the regular trading house chart on NQ and ES as well, from this low and this low. If that low gets broken, I'd be surprised because it's a really strong level there. But because we've rejected it so heavily, an S&T, you don't want to see any like deep retracements. If it starts running, displacing in your favor after an S&T, for it to retrace deeply like this, you can do your own backtest study on this. If it returns into the wick that was the S&T and it's the upper half, cool. That's an array, that's fine. But if it's going beyond that level, or maybe it's not a strong wick, it's a candle body, that's normally it's going to be too deep to see the S&T perform. Because an S&T, because it's such a strong catalyst to the move, it just lets it run and run and run and run with speed. And usually, if it's not showing you that, or it did show you that and literally just turned around on it, retraced all the way back really near to the S&T, it fails. Another divergence. Okay, well the CE of our opening range gap was reached. Yes, let's took out its regular trading hours sell side liquidity pool. $8.59 breakup. Yeah, but I think honestly these gaps are a bit more significant. If I'm looking at this breakup, I'm using the. Oh yeah, you did say 59. Yeah, you're right. Really clean level. Right, that's deep discount because we're below 8:30 at midnight. We're at the upper quadrant of this volume imbalance, so we have a couple arrays here that could hold and provide reversals, like this one. That's one array. Pretty much this one. No fair value gap yet. Yes. if you wonder why I always drill on about the first presented fair value gap, it's because if there's no fair value gap, you're usually in a bad price condition. And this is, it's tradable, but it's not, A plus. You want inefficiencies, you want displacements, and when you see these large wicks that go against you, that go for you, that go against you, that go for you, it's really not the ideal trading condition. You want to see it start moving like this. Up close candle is left in price as resistance for the down close candles. That's a good sign of order flow, or one-sided order flow with inefficiencies, or vice versa. Down close candles providing support for up close candles like we had over here. You need one-sided clean price action if you want to get in these really clean drawdown, zero drawdown trades. Not that you need a zero drawdown trade, but you'll find the winning trades that just really, really deliver, they just go, and it's fast and it's instant. And those conditions come when there's displacement and one-sidedness, not large wick reactions to the upside and to the downside. Okay, that's our pre-market low swept on NQ and ES. We can look to see if this is going to be a sweep now or if it's going to be a run and keep continuing lower. Okay, I don't want any of this. Okay, we're in this daily volume imbalance. You can look at this new week opening gap as well if you want, but I'm not gonna. But if you would, read this. Not new week opening gap, new day opening gap. Would be that level. Sixth of February's new day opening gap. For a reversal, the nearest reversal signature would be this fair value gap, and it's quite far. So you have to demand, and you have to be patient enough that if it's going to reverse, that confirmation signal is an inversion of this gap where it's a strong close, not anything weak. Anything weak doesn't count, it needs to be strong. Going up into it doesn't necessarily mean it's going to reverse. It can be using that as a serious trade lower. You have to remember it has to invert the fair value gap. Trading into it isn't good, it needs to trade beyond it, which is what's doing it in nicely. Order blocks, people worry about order blocks when it's reversing, like the order block is going to provide resistance against them. If you've taken out liquidity, here's a very good tip for you actually. If you go to the point of the price move that begins to run lower, where liquidity is taken out, and then you put on 50% fib like this. Yeah. Anything in discount is very low resistance. Anything in premium, if it's an order block and you've taken out liquidity, it's easy to invert. So as long as you invert it, it's good. Okay, that's inversion order block. A really nice big gap here from this 943 candle. So that's an inversion order block right there. I'm not going to keep it on the chart because that would just be too much. Returns to the opening range gap low. Now you have to look at which side of the opening range gap is your 930 opening price. First here is the low, 930, and this is where it can get a little bit tacky because you're at a little bit beyond 50% of the implied dealing range if you're looking at this major buy side liquidity pool, so it can consolidate here a bit more. Generally, price is always more likely to consolidate at equilibrium of a range, any range. It doesn't mean it will happen 100% of the time. At times like this, it's less likely because we're just running up very one-sidedly. But in general, I'm not saying now because I don't think we'll consolidate now, but in general, at equilibrium of a range, you can consolidate more. Combine that with an opening price at a certain range, and you'll see it feather this level to just build in orders, and then let smart money accumulate it right below in that discount level and then run higher. So this is your Magdalene open. Okay, every gap here is a breakaway gap. That's really good. That's generally conducive to a stronger run. That's going to be more pronounced, and it's going to continue beyond a level most of the time. Same with ES. It's virtually an identical price run. Every gap in here is a breakaway gap. That's its pre-market high. Probably IOFED. Now from the electronic trading hours chart, we were looking at this as our major buy side. On regular trading hours, we have all of this price run that we can work through as well, beyond that major buy side. So all of this, to me, I would say is very likely because it's low resistance for one. All these highs, they're nicely bundled in close proximity, and it's not in a way where it's mucky bounce price range. It's trendline liquidity essentially. And then because of how strong this run up was, with breakaway gap, breakaway gap, breakaway gap, there's only really one retracement in this entire range. That's that one there. To me, I would say it's very likely to run up into this. And now if we go to a fresh chart, you can use an implied dealing range from this high down to this low. If you're someone who was around on this channel from the early days when I used to do like all those weekly outlook videos as well, you'll remember how we got the all-time high to the tick using this measuring gap, which I'm about to show you. So if you have a breakaway gap at 50% of the range, breakaway gap, and this is not anticipated to be traded back into this when it's really not even close to the upper quadrant, that's fine. That is a measuring gap. And then if you take the consequent encroachment of this range of the measuring gap and you take the fib so that it aligns with that consequent encroachment level, like that. As long as this gap is open and we're expecting this price run to keep going in our favor, we have now a range that we can project even further. So I'd say 1.25 and 1.5. So this would be like the ultimate objective for me. Now obviously, in this case, I think a run up into this high would be enough. I would just take my profit there. I don't even know why I showed that, but it's just a little Easter egg. Okay, it's gone through the measuring gap, so it's not even valid. But normally, say that gap isn't traded through and it's left open, then you're likely to fulfill this, and that would be your measuring gap distribution expectation. But this is only valid for as long as the gap is left open. But obviously it's not left open. Oops. Okay, it took our pre-market high and CPI data high. So that's our first target achieved, and it also took the agent high. Beautiful. Beautiful. Okay, I've got the 950 to 1010 macro now, beginning. Bit of a deep retracement. It may take a couple of candles to build this back up, but we're in between here. Two balanced price ranges. This is a balanced price range. And this is a balanced price range. You won't see it reject this level because it's also below the opening price. So this is like an ultimate form of discount. And because we have balanced price range, essentially stopping it, like if we go through an inefficiency, why should it stop and then start turning again? The balanced price range below it, right here. Take that off, take that off. And because it's at a discount level, we want to see it be sensitive and reject. Glad that I've taken partial of the agent high. You should have taken full profit at the agent high, to be honest. That's interesting. Okay, still rejecting that level. The beauty of Valorex's face is beyond my wildest dreams. Ah, thank you. Bro, the amount of x-rays you use is goated. I don't know what you mean, to be honest. Oh, PD arrays. Well, I don't use that much. Well, I guess compared to other people I do, but do you mean the amount I have on my chart or the amount that I just use in general? Okay, this is the less algorithmic price action we were expecting. So because we wanted it to reject from this level and rally higher, we wanted solid bodied candle through this. It going up there, entering the CB and then rejecting, it's not ideal because we wanted, it's showing all the signs that it should give you a solid bodied nice candle that's telling you a story. It's going to invert this and then run higher. But it doing that and then getting so close and rejecting it right at the last second, that's the unalgorithmic price delivery that we're expecting today because of yesterday being such a large range day. All that run lower. This This run pales in comparison to that one. Got 10 minutes just to miss what I was looking for. Ah, sorry to hear that, brother. Trapping traders right now? Yes. Yes, of course. Every consolidation is building in liquidity. Retracements are consolidations, by the way. It's just a different type of consolidation. I'm talking about the special PD arrays which are different than the usuals, like opening range gap, first presented fair value compared recession from last 69 days, quadrants, new opening gap, new day, opening gap, spins around a fibs, they look cool. Yeah, I guess I'd use more of the dynamic PD arrays a lot. The fancy ones, you could say. Like, no one uses measuring gaps. Grey pools. I really like grey pools. Grey pools are one of my favorite arrays. Okay, this, to me, inversion. I'm gonna take these quadrant levels off. Ooh, a little tick below midnight. That's nice. Hopefully it doesn't go too far beyond that gap. Oh yeah, it's gonna take the pre-market high. Interesting. That's an S&T. I should have looked at that earlier, to be honest. Because then I would have thought it would go higher. Okay, it's rejected this, so I'm going to take that off. And in hindsight now we can see which PD array it reacted to. This one. This little civvy over here, this cheeky side. Immediate rejection at an OTE level. See how you can just eyeball that when you're experienced enough. Monday holiday, big drop today. I'm not aware of Monday's holiday being anything that should influence Friday that much. So I wouldn't agree it's because of the holiday. I would just say it's because of the ranges that we're seeing. That is a TGIF expectation, though, I believe. Let's take a look at our other layout. Just short of the 30% level. Ever so slightly short. Oh wait, no, it's not short of the level. Because when it made the lower low, then you look at the next TGIF level. So it did reach TGIF 30% retracement. Beautiful. What is the yellow box? The yellow box is a daily volume imbalance. So if you look at your daily chart, and then you have to have settlement toggled on. I don't know why sometimes it doesn't appear on the bottom right, but if you go into your settings, click on symbol, and then you click this, you can see my chart is changing. When you click use settlement, it's just using a different time as the daily candle's closing price. ICT says with volume imbalances, you just look at the larger one. So if I'm looking at without settlement on, it's quite small volume bounce. When you put it on, and it's a little bit bigger. So that's the only difference in this. And I have it toggled on, I'll toggle it off because it's different. But the volume bounce I'm using is from the settlement chart. That's all. And you can see the perfect reactions from these quadrant levels. Consequent encroachment, lower quadrant. Yeah, in a nutshell, TGIF is just a reversal / bounce state, yes. A TGIF is just in the weekly power of 3 on a sell week. This is our opening price. This is the high of the week, usually Monday, Tuesday, or Wednesday. This is the distribution, usually Tuesday, Wednesday, or Thursday. The lowest low is usually created on Friday, so this will be Friday's lowest low. And then the TGIF is just the retracement on that candle. So every candle goes by this. Every candle, no matter if it's the 1 minute or the daily or the monthly or the weekly, it follows this power of 3. That's why it doesn't matter if there's 24-hour trading, it will always follow this. And you'll never need to worry about new market rules or whatever. The TGIF setup is just capturing the move from the lowest low into the 20 to 30% retracement. You don't need it to close, you just need that move. But you don't even need it to be the lowest low. If you had done it from this low and got that TGIF, there was one there. There was one at this low going up. There was one at this low going up. There's a bunch of TGIF setups. A bunch of them. Okay, a little bit more range bound. Don't chase it here because there's no obvious direction. It's gone range bound. So you needed to leave this. And when it leaves it, you have to also ensure that you're not the retail trader looking for the breakout, because breakout artists just get smoked most of the time. You have to look at, okay, where is it actually leaving the range? And how do we as ICT traders do that? Well, we can confirm it with things like macros, S&Ts, inefficiencies, or reference points being respected, etc., etc. Using 938 breaker to gauge order flow. That is not a breaker. This is an inversion order block. Yeah, look, there's a misconception because of people that teach ICT but they don't really know it. This is an inversion order block. It's not the same as a breaker. People will tell you a breaker block is just a disrespected order block. That isn't true. You have to look at the market structure for breakers. So it's a high, a low, a high high, and a lower low. The reason other ICT traders may teach it as a disrespected order block, many times it will not coincidentally, but it will be one because of how the market structure of a low high, lower low, higher high forms. It will usually be an inversion order block, but not always. So you have to still approach it with the correct approach: low, high, lower low, high high. You can technically frame this as that little thing up there is a swing high, and technically this little thing here is a swing low, but these are not actual breaker block qualities because I've explained breakers a ton of times before, but it's about where stop losses are being engaged, where traders are getting in and out. What this actually is an institutional reference point. It's an order block. It's counter trend liquidity, and a move against the real direction for smart money to get in, because smart money they can't sell it as it's going down. They can only sell it as it's going up because they need that counterparty liquidity. So that's what an order block is. And then when it has the inversion aspect, just like a fair value gap, it performs amazingly. Just don't confuse it with a breaker block. You're welcome. You only learn that stuff if you go through like all of ICT's content and you take it contextually and with a critical thinking approach. If you go with like, I'm not gonna diss the guy, but T-Trades, you know, very basic, doesn't really contextualize the information. You need to understand how things form, why they work. Otherwise, you can never universally adapt it to an individual price condition, an individual candle. You're essentially pattern trading, but with extra steps to filter out some of the patterns that you use. Whereas if you have the real understanding of how market structure influences a breaker, you can select the right ones. See, it's just gyrating between these opening prices. A bit above midnight, a bit below 8:30, a bit above midnight, a bit below 8:30, a bit below 8:30. That's what I was saying earlier. I remember right at the start I said, I don't think we'll consolidate, but we can consolidate at 50% of the range. And especially when there's opening prices we gyrate around. That's exactly what's happening here. Boom. Who's the wizard? I'm the wizard. Alright, ICT is saying on Twitter, be content with enough. Next week will be low resistance liquidity runs. So I guess he thinks today will be high resistance. Generally, not all the time, but generally, when TGIF is reached during the New York session on a Friday, the rest of the day falls off a lot. And I'm not falling off in terms of it dumps in a direction, I mean the odds of good trades occurring, it falls off. So after TGIF has been reached, that's essentially the weekly power through done, and you don't really need to stick around anymore. Come back Monday. What's up, Suey? How we doing? How we doing? The man from Korea. I was gonna say the man from Japan, but that would be incorrect. Incorrect. I was really ready to catch a run out with the way price routed from the purge with the breakaway gap. Yeah, it looks that way. It threw ICT off guard as well. 4.20 evals next week. I don't recommend it, to be honest. Nice to see you in Innisui. That's for evals. Let's go. Let's go. Were you using the CPI method to pass the evals? What holiday is it, Monday? It's bank holiday, I think. Oh. Like regular 1 micro, 2 micro trading. Yeah, Monday's bank holiday. I longed up to the pre-market low, was taking a few micros. That's my man. Silver bullet Sui. Okay, that's still not obvious. You might think, oh, it's running up. Remember, don't be caught up in the retail mindset breakout with this, because it could just take this high and completely floor it. So until it's more obvious, this isn't obvious. Until it's obvious, just chill, because we've had TGIF reached. we've had liquidity on both sides purged, and we're coming out of consolidation without a clear draw. So yes, the regular trading hours has beautiful low resistance up there, but because of where we're trading inside right now, you just have to take it with extra caution. ES, a bit stronger to be honest, quite a bit stronger. Leaving this breakaway gap. Going up above the opening range gap of 6th of February. It'll be interesting to see us kind of reject this price level and then ES go back into the pre-market high. If that happens, then it's nice displacement through. Nasdaq would be freed up to run into the highs over here. But again, I'd be content with that. I wouldn't be trying to force something right now, not when it's unclear. Got in 24668.5. Oh, moi. Right on. That's beautiful. What are you using? First presented Fair Value Gap? Nice. That's my man. Silver Bullet Mentorship on YouTube for free. One more tap on the opening range gap high. That is an inversion, but it's not a strong inversion. It is an inversion. These aren't the inversions I take trades off. I just use them to look at price. Eversions you want to take trades off come around. Well, the best ones are going to be the first fair value gap prior to the stop run. So this one. For us like a cheat code. Also, I've been paper trading some pure power 3 this week with so good results using 4-hour candles and all trades in your game kills and macros. Nice, nice. Yeah, Sue is a market maven. But it's still you doing it, right? Because other people have gone to their mentorship and they can't make it work as well. And everyone has a different learning curve, so it's not anything against them, but you just picked it up like instantly. The second you went through it, it's like you just needed one watch, I think, or 2 watches, and you just got it. No prior experience. That's the most impressive thing. But then again, your brain wasn't poisoned with like retail crap. retail crap being trend lines and RSI. Okay, yeah, they're very stubborn on releasing it from the range back into the new day opening gap. Rejects. I wonder why. It would go right into these random lines here and reject it. Almost algorithmic. Almost algorithmic. Not quite though, still random. Go back to this chart. Okay, because of the way it's moving right now, where it's deep retracement, constantly in the range, refusing to leave the range, it is reacting from PD arrays, but don't let it trick you. It's not a favorable price condition right now. So sit on your hands or get off your butt and go do something else, because these aren't conditions you want to be in. Reluctant to run this range, reluctant to really leave anything. If you have such a strong run like this and you can't leave the range, is it really worth being here? Because if it's such a strong run like that and you can't really leave the range, this isn't going to yield you anything. That isn't going to help at all. So the best thing to do, and what I'm going to do, is leave and be content with the move. TGIF has already been met. Our expectation on TGIF, which we called at the beginning of the stream, has been met. The buy side data highs, the Asian high, has been met. It's pretty much most of the stuff we called. I didn't want to see the pre-market low taken initially. I just wanted it to immediately run up, but then it did take out the pre-market low. Classic silver bullet, and yeah. Other than that, not too eventful, but a really clean first percentile fair value gap. It might have been a dash of autism. It was that. That's not a very interesting case. Same, but I'm not autistic, so that's the difference between you and I. Okay, that will be the end of today's stream. Monday, next week, every day there'll be more streams and more tape reading. Thank you for your interest if you were here, and I will see you all bright and early on Monday for the daily analysis. Goodbye.